So let's talk about converting possibilities into probabilities. Because possibilities are nice, but let me ask you the truth, okay? Which do you want to know more? Do you want to know what is possible, or would you rather know what is probable? Probable. Why is that? Why do you want to know what's probable versus what's possible? Because it's about you. We're all selfish. We want to know what happens with us. In order to get beyond it, I need you to understand this second lesson, and it is this concept of the law of doubles. You see, when it boils down to it, everyone is just about 10 doubles away. Like if you were starting out right now with $1,000 a month of income, you are essentially 10 doubles away from $1 million of income, right? 1,000, 2,000, 4,000, 8,000, 16, come on, 32, 64, 128, 256, 512, and over $1 million. Now, again, I know it's so simple, right? 10 doubles. But if you focus on that as a goal, what could you be doing day to day to double your income? Not easy, but simple. But if you focus on the one goal and you tackle that one goal instead of trying to multitask on 19 million things that most of us are usually engaged in, right? It's very difficult to make progress because it's very hard to divide attention. It's very difficult to divide attention. But if you focus on the outcome that you desire and do the one thing that will get you there, you can make progress. But don't confuse work and activity with progress. I mean, people have experienced that. You put in a lot of effort in a particular day or work week. You look back on the end of the week and you're like, what did I actually do? What actually happened? And that's the challenge. We get so focused on dividing our attention and dividing our focus that we actually can't make the progress that we want. We can't put ourselves in the situations where we can learn the things that'll get us to that next level, right? That'll make that double happen. Would you all agree with me that it is possible to double from $1,000 a month to $2,000 a month? Would you agree with me? Yes. Okay, so it's possible. Would you agree with me that it's possible to go from 2,000 to 4,000? Yes, it's possible. Why do you think it's possible? Because you know someone who's done it, probably, right? So if it is a possibility, you can find out the path to get there. We're going to talk about possibilities a lot, but this doubling concept, this is sometimes about not necessarily doing something new, just doing what you've been doing consistently and then leveraging this concept called time. See, there's this concept called compounding. How many people have heard of compounding? Right? Compounding is oftentimes the eighth wonder of the world, as sometimes accredited to Einstein. But the power of compounding is simply allowing time to take what you're doing and extending that over and over again in order to get that result. Because time, when it's leveraged correctly, that can be the thing that gets you to that outcome. How many people have seen or know who this person is? Anyone know who this is? It's Warren Buffett. That's Warren Buffett. Did you know that at age 21, his net worth was about $20,000? Now, at his time, when he was 21, that's a lot of money. But he started investing when he was a teenager. So by the time he was 21, he had amassed $20,000 of net worth. By the age of 26, his net worth had gotten to $140,000 because he was continuing to do the things he was doing. And he was refining it. But he was doing the same thing. He was investing. He was refining it, trying to get better and better at doing that thing. He was improving his skill set to get the outcome he desired. And by the time he was 43, his net worth was $34 million. He wasn't doing anything different. He chose one thing for his outcome, and his one thing was investing in quality companies. Companies that he would dive deep into understanding the financials of those companies so that he could feel comfortable as whether or not his dollars were being put to work in a good way. But he made the choice because by age 55, his net worth had surpassed that $1 billion mark. right? This is amazing. But here's the thing, by 92, his net worth had hit 10 figures. It's like well beyond it. It's this third coveted comma at $115 billion at 92. I hear a lot of people saying I'm too old. I can't get started. Look at the difference from 43 years to 92 years. He used time, and he spent every moment trying to refine what he was doing, get better at it. Because he learned, at least from a conceptual standpoint, that education doesn't stop when you leave school. He chose to invest in himself continuously to constantly improve to get the outcomes he desired. It is a simple concept, not easy. But the reason why so many people don't get outcomes like this is because they're not willing to do the work. How many people have ever joined a gym and then quit the gym? Yeah. Can't get six-pack abs in a month. Not going to happen. You can't get biceps like anyone else who has like massive biceps without actually doing the reps. And the funny thing about the gym, which I love this analogy, is because you can do the work for a really long time and still not see any result. It's way in the distant future that you start seeing, oh, wow, I'm really happy that I did day after day, week after week, month after month of continually trying to refine my body. Now, if it's about your business, how many people are business owners here? If it's about your business, what are you doing daily to improve your business skills? To improve your marketing, to improve your ability to convert those customers, those patients, into individuals that will trade their dollars for the value you create. All money follows value creation. Simple. Not easy. Now, when you compound these two lessons with this third lesson, the easiest way to make more money is simply to keep more of what you're already making. This lesson can change your life. I get asked a lot when I come up here and I talk in front of audiences. Inevitably, when I leave the stage, I usually get someone coming up to me and they're saying, Edward, how can I make more money? You talked about money all day long. I'm so excited. How can I make more? My response is always the same. Keep more of what you're already making. Keep more of what you're already making. Because this concept is pivotal for you to understand. I believe taxation is theft. I'm not afraid to say it. I'm not afraid to say it. I'm very vocal about this. Taxation is theft because you work to create that money. Now, did you use infrastructure? Yes. But you paid for that. The problem is, we keep paying for it over and over and over again. Did you know that the average family in the United States right now spends more than 50% of their income on taxes? More than 50%. Now, a lot of people are saying, wait a minute, Edward. The top tax bracket right now is 37%. How's that possible? Come on. There's these things called the erosion of the dollar. I have 5 erosions I want to talk with you about because I want to make sure I'm in the right room. You go out and you make money. What do they do with it? They tax it. It's called an income tax. Now, you go out, and let's say you spend the money you earn. What do they do with that? They tax it. It's called a sales tax. Now, you go out and you spend the money, you buy something, and the thing you bought that has been taxed twice, you go out and you sell it, and maybe it grew a little bit in value. What do they do with that? They tax it again. It's called a capital gains tax. Now, let's say you don't sell it. Let's say you just want to keep stuff that you bought, that you've been taxed twice on already. What do they do with that? They tax that too. It's called a property tax. Final nail in the coffin, you amass real wealth over your lifetime. What do they do when you die? The estate tax. Final nail in the coffin. Now, here's the problem. Those are the 5 taxes that through policy, we actually have some influence on. Because we can essentially elect people and say, hey, listen, I'm not going to vote for you if you vote for XYZ tax. But there's a problem. There's actually a 6th erosion. and it's beyond our reach. You see, anyone ever see this thing before? This is the US debt clock. I know it's hard to read. Take a quick snapshot. Quick snapshot. So I want you to have this on your phone. I'm about to blow it up because I want you to see this. Everyone took a snap? Love it. Here we go. This is the US national debt right now. $34.7 trillion. That's trillion with a T, guys. That's a really big number. It's really hard, though, for most of us to really conceptualize that number because we don't talk in terms of trillion. So let me put it into perspective for you. About how long ago was 1 million seconds? 3 months? Couple months? Couple weeks? It was about 12 days ago. 1 million seconds was about 12 days ago. How long ago was 1 billion seconds? 34 years. It was pretty close. It's about 32 years ago. How long ago was 1 trillion seconds? 300 years. It's about 32,000 years ago. That's the difference between 1 million, 1 billion, and 1 trillion. And we have $34 trillion of debt. Now, I don't care who in Washington, D.C. wants to proclaim that that's fixable. It's not. The math doesn't math here, guys. And this is an actual tax. Why? Because the way this happened is through a process called money printing. Anyone ever hear of that? Yeah, if you do that in your basement, you go to jail. Government gets to do it for free and has a smile on their face while they're doing it. There's this concept called the new economic theory. It's complete horse crap, okay? It's horrible because what they essentially say is it's perfectly fine to continue printing money. Did you realize that of all the money that has ever been printed in the history of the United States, nearly 64% was printed in the past 4 years? Do you hear that? 64% of all the money that's ever been printed in the history of the United States was printed in the past 4 years. No one voted on that. It's policy. And the problem with that is when you have more dollars in a closed system competing for the same amount of goods and services. Now, I'd argue that goods and services actually went down after 2020, at least for a period of time. I'd still argue that many of them are down today. You ever been to the grocery store? Try to buy eggs lately, or milk, or orange juice, or anything? This process, when you have more dollars competing for the same goods and services, this results in what's called inflation. Inflation, I don't care who else is talking to you, inflation is a tax. And the only way to combat inflation is through cash flow. It's the only way. It's the only way to offset the impact of inflation is if you have cash flow. And if you own assets, meaning you are in control of something which generates cash flow for you, because that's my definition of an asset, something you control which generates cash flow for you. If you control it, you can raise the prices. But if you are a W-2 employee, you can't necessarily raise your own salary. Even if you are a business owner, you can't necessarily raise your own distribution to yourself. But you can raise your prices as long as you continue to add value. Cash flow is the only thing that allows for this concept of inflation to be muted in your financial future. But you need to know how to do that. You need to understand how to get to that outcome. And that's where I want to talk about this concept of possibilities. I sort of hinted at it earlier on in our discussion. There is a big difference between possibilities and probabilities. Very big difference. But I'm going to tell you something. Business ownership can put you into the driver's seat. It can give you the opportunity to get the outcome you want, but you have to understand how to drive the car, right? It's really nice to be sitting behind the wheel, but if you don't know how to get to your destination in the vehicle you're driving, that's a problem. So let's talk about converting possibilities into probabilities. Because possibilities are nice, but let me ask you the truth. okay? Which do you want to know more? Do you want to know what is possible, or would you rather know what is probable? Probable. Why is that? Why do you want to know what's probable versus what's possible? Because it's about you. We're all selfish. We want to know what happens with us. I don't care necessarily what Edward is saying on stage about Joe Schmo, right? I want to know what I can do. Perfectly fine. I accept it. I'm an unapologetic capitalist, right? So I'm okay with you being a capitalist as well, being concerned about yourself, right? Put your own oxygen mask on before worrying about the person sitting next to you. Why? Because if you don't, what happens? You can pass out and you both die. So definitely be self-centered. Be focused on yourself, because you could be charitable when you have money. You can be really charitable and do really good things with other humans when you have money to do it, when you have financial freedom. Now, here's the thing. Possibilities can become probabilities. So I don't want you to ignore possibilities, because they can become probabilities. This happens through one word. This one word is called action. So let me explain what I mean. See, I try almost never to talk about impossibilities, because it's very difficult, right? Like, for instance, if someone asked me, Edward, how do I get to Pluto? I have no idea. I don't know anyone who's ever been there, right? So I don't know how to get there, so I can't teach you. But if you ask me, you say, Edward, how can I get to 30,000 feet? That's possible. If this video resonated with you and you're interested in more videos on the topics of financial literacy for US-based business owners, well, go ahead and like and subscribe to it, and be sure to click that notification bell so that you get notified when the next one gets released.